The investors who do best over time usually aren't the smartest in the room. They're the ones who look at their accounts the least. It sounds backwards until you see what staring at your money actually does to you. Zoom out, and a broad stock market has finished higher in roughly 3 out of 4 years. But zoom in to a single day, and it's close to a coin flip. Green a little more than half the time, red the rest. The long climb is real. The daily noise is just as real. Picture that as a line. Over the years it grinds upward, but up close it's all jagged, full of dips that feel like the floor is falling out. The trend and the turbulence live in the very same chart. Which one you notice depends entirely on how often you look. Here's the part that quietly wrecks returns. The more often you check, the higher the odds you catch a loss on the screen. Look every day, and historically you'd see red almost half the time. Every month, closer to a third. Once a year, about 1 in 4. Stretch to 5 years, and losing stretches become rare. Now add a quirk of the brain. A loss hurts about twice as much as the same size gain feels good. So every time you check and see red, you take an emotional hit a green day never repays. Check constantly, and you pile up hundreds of little gut punches a year, each one nudging you to do something, anything, to make the pain stop. Same portfolio, 2 people. One checks every day, roughly 250 looks a year. A stream of red and green, constant tinkering, selling whenever it dips. The other checks once a year, sees a single number, usually higher than last time, and does nothing. Over decades, doing nothing wins, quietly, almost always. And that's the whole trick. You can't panic sell a dip you never saw. Looking less doesn't just save your nerves, it removes the very moments where most investors blow themselves up. So the most powerful move might be the simplest. Automate your investing, then close the app, put the phone down, go live your life, and let time, not your thumb, do the compounding. So remember the pattern. Check daily and you'll meet red almost half the time. Monthly, about a third. Yearly, 1 in 4. The less often you look, the less loss you ever have to feel, and the more likely you are to simply stay invested. Try it this week. Pick one day, once a quarter, to look at your accounts and ignore them the rest of the time. Your future self and your returns will thank you. Follow along for the money psychology no one taught you.